Good evening, everyone. Ritika, Labiba, Zainab, and Venetia. Please confirm if I'm audible to all of you. Labiba, am I audible to you?
Yes, sir, you are audible.
All right. Uh, okay, everyone. So in the last session, we have completed our chapter, journal entry. In today's class, we will be starting a new chapter, which is ledger.
Sir, will you tell us our marks?
I'm sorry,
Sir, will you tell us our marks on that day we wrote the test right?
I'll be telling you that in a couple of days. I didn't check the test yet. I'll be informing maybe probably in the next class.
Okay, sir.
Okay. So everyone, we need to start the chapter ledger, and as usual, we'll first of all start with the meaning of the ledger. First of all, we need to understand what is actually ledger is. So ledger is what it is basically a you can define the ledger as a book which is open uh, uh, to record the transaction posted in the journal. Just a minute, let me show you. Ledger. So ledger is what? Ledger is a book. Ledger is a book account that contains accounts which wherein we record various transactions. So see, in while covering that chapter, journal entry, I explained that journal is a book where we record all kind of transaction at one place, right? Every transaction is recorded at one place, that is called book of original entry or journal. But ledger is what? Ledger is a book that contains different types of account for recording different kind of transaction. Like for example, if we have we conducted we transacted various transactions. We conducted various transactions relating to purchases. We have bought furnitures. We might be selling or buying buildings during the accounting year. We must be selling goods. Right. So what do we do in case of journal entry? In case of journal, we record all these transactions at one place only, one book, one place, which is called journal. But in case of journal, in case of ledger, what do we do? We record all similar transaction at one place. Like for example, transaction relating to purchases are recorded at separate place. That will be called purchase ledger. Transaction related to purchase will be recorded separately in the purchase ledger. Transaction relating to sale and purchase of furniture will be recorded separately in the furniture ledger. And similarly, all transaction relating to building will be recorded separately in the building ledger or building account, you can call it. Sales related sales related transaction will be recorded in the sales ledger or sales account. All right, so this is the basic difference between the journal and ledger. Journal is a book of original entry. It is also called it is also called primary book, wherein we record all the transaction at one single place, irrespective of whether it is related to sale of goods, purchase of goods, whether it is related to debtor, creditor, furniture, build, anything. Everything is recorded at one single place, which is called journal. So journal will provide you information regarding each and every transaction, right? Each and every transaction in a chronological order. Chronological order means every transactions are recorded there a date wise, right? As and when transactions are incurred or transactions happen, we tend to record all kind of transaction at one single place, which is called journal. But in case of ledger, what do? We classify all similar transaction in one single ledger, other similar transaction at one at other ledger. So every transaction which is similar to the other are kept separately, are maintained separately. That is called ledger. So ledger, precisely explaining, we can call it ledger is a book which record all the similar transaction at one single place. All related and similar transactions are recorded separately. That means we will be maintaining a separate ledger for the purchase account. We will be maintaining separate ledger for sales. We will be maintaining separate ledger for building, furniture, and etc. Okay, so this is how we can define the ledger. So ledger is what? Ledger is a book. Just a minute. Ledger is a book, just like journal. Journal was also a book, right? But in case of journal, we tend to record all the transaction in at one place in the chronological order. But in case of ledger, ledger is also a book, but here in the ledger, different accounts are opened depending upon the different kind of transaction. Different transaction depending upon different transaction, different account are opened, and transactions are posted from journal to the ledger. See, if we talk about the sequence, journal entry is always come first. Only then after we can do the ledger. Journalizing is the first step, and then the transferring the transaction to the ledger is the second step. All right. So all the account put together make a ledger. So if you have to define what is a ledger, you can say all the accounts like sales account, purchase account, debtors account, all right, creditors account, goodwill account. All these different types of account are known as what? This is called ledger. Collectively, this is called ledger. Okay, now see, ledger, that is what I was explaining. Asset account, liability account, revenue, expense, capital, all these account collectively known as ledger. A ledger is also called book of final entry, since all the transactions are recorded in the book of original entry, are originally entered in the book of original entry, are transferred in the ledger. So transferring the transaction from the journal to the ledger is called posting. What do we call it? Transferring the transaction recorded in the journal to the ledger is called posting. Posting of journal entry. There are these are the few features of the ledger. Like it is the master record of all the account. It is prepared from the journal. Right. First of all, journal is prepared, and then only you can prepare the ledger. So unless and until you have prepared the journal, you won't be able to prepare the ledger. Ledger account show the current balances in all the account. Trial balance and final account. We will cover these points later. Right now, you can ignore these points. Moving on, this is the format of the account. This is the format of the, you can say this is the format of the machinery account. This is how we prepare account. Every account have two sides. This is the debit side of the account, and this is called the credit side. So debit side contains 3 column: date, particular, amount, right? And for on the credit side as well, we have four column on the debit side. We have 4 columns on the credit side, including journal folio. So date, particular, journal folio, and amount. And on the credit side, we have date, particulars, journal folio, and amount. All right, everyone, is this clear? Ledger is what? Ledger is a book that contains various different types of account to record all the transactions of the journal. All right, all of you, is it clear? Yes or no?
Yes, sir.
All right, everyone, please note this down quickly so that I can move to the questions of the chapter. Just note it down and let me know whenever you are done.
Sir, done.
Done, everybody?
Yes, sir.
Yes, sir.
All right, please note this down as well.
Sir, done.
Done, everyone?
Yes, sir.
So basically, all the different types of account are collectively called ledger. Asset, liability, revenue, expense, and capital, all of these are collectively known as ledger. All right, and please write this point as well. A ledger is also called book of final entry. And since all the transactions are recorded in the book of original entry are transferred in the ledger.
Done, sir.
Okay. All right. So moving on to the next point. Uh, let's not write down the features of ledger for the time being. Let's just skip this point. We'll cover this point later. Now see, this is the format of the account. All right. So this is how we prepare account. But every account have two sides. These four columns come under the left side of the account. These are called left side of the account. And these four columns are the credit side of the account. Left side of the account is called the debit side, indicated by DR. Whereas right side of the account is called credit side, indicated by CR. All right. Now see, let's let me show you how do we actually prepare uh, prepare any account. As I just told you that first of all, every transaction is journalized. The first thing that we need to do is, first of all, every transaction need to be journalized. Once the journal entry is done, then we post the same journal entry into the ledger. Right. So like this example, it says that on 5th of June, purchase furniture from Mehfil Mart 40,000. So there is one mart which is called Mehfil Mart. From that mart, we are buying 40,000 furniture worth of 40,000. Right. So what? Anybody please tell me the journal entry of this, please. Could anyone please tell me the correct journal entry for this? We have bought furniture from Mehfil Mart.
Furniture
40,000.
account debit.
Yes.
Furniture account debit to Mehfil Mart account.
Perfect. Since the name of the seller is given, na, so it shows that we must be buying the furniture for on credit. So the journal entry for this will be furniture account debit to Mehfil Mart account. Now see, in this journal entry, two accounts are getting affected. First of all, furniture account is getting affected. At the same time, Mehfil account is also getting affected. What is happening to furniture account? Furniture is increasing, and at the same time, Mehfil Mart is also, see, Mehfil Mart is what? Mehfil Mart is our is our creditor, right? Since he allowed us to buy the furniture on credit, so this is our creditor. And furniture is what? Furniture is an asset, right? So in this transaction, what is happening? Asset is increasing and creditor is also increasing by 40,000. Yes or no, everyone? Yes or no? Everybody understood this point? This is the journal entry of this transaction. Everybody understood that this transaction is affecting two aspects. Firstly, it is affecting the asset as well as it is affecting the creditors. Asset is increasing and creditor is also increasing by 40,000. Is this point clear to all of you? Yes, okay.
Yes, sir.
Now see, since journal entry have two different items, one is from the asset and one is the creditor, that means we will have to open two different kind of account. This journal entry has to be posted in two ledgers. So firstly, we will prepare furniture account and then we need to prepare the Mehfil Mart account as well. Now see, pay attention, try to understand. We will prepare furniture account, number one, and then we will prepare Mehfil Mart account. Got it? This is how we will be preparing the accounts. Is it clear to all of you?
Yes, sir.
Everyone, please tell me if it is clear or not. After doing the journal entry, we will prepare the accounts. Since two items are involved in the journal entry, two items are getting affected. So we need to open two accounts. One is for the furniture and other will be for the Mehfil Mart. So we will be opening a furniture account and then a Mehfil account, right? And now we will post the journal into the ledger. This is what we call posting. Now see, first of all, we will write in the furniture account. Now pay attention, try to understand. What does this journal entry say? It says that furniture account need to be debited. Furniture account need to be debited. Yes or no? So that means we will go to the debit side of the furniture account and write down 40,000 here. 40,000 in the furniture account. But pay attention, try to understand. In the furniture account, we will be writing to Mehfil Mart account. Mehfil Mart account. Name of the Mehfil Mart account will be written, not the furniture account. Since whenever you prepare the furniture account, you won't be mentioning the furniture account while recording the transaction in the furniture account itself. While transferring the journal to the ledger, we will write down, since the furniture account is debited by 40,000, two Mehfil Mart accounts, will write down two Mehfil Mart. On the other hand, when we will write down the transaction in the Mehfil Mart account, what do? We'll go, it says to Mehfil Mart account credit, 40,000 will be credited. So we'll go to the credit side of the Mehfil Mart account and write down 40,000 on the credit side. On the credit side. How much? 40,000. But anybody, could anyone please tell me what will be the name written on the credit side? Either I should write down the Mehfil Mart account or furniture account. Tell me.
Furniture account.
By furniture account, right? So this is how we post the journal entry to the ledger. I hope this point is clear to all of you. Okay, this is how we will. First of all, we will write down the date, 5th June. On 5th June, Mehfil Mart account 40,000. It shows that we have bought furniture from MEB Mart account of rupees 40,000. And on the credit side, we'll write down by furniture account 40,000 in the MEB Mart. And that means he sold furniture of rupees 40,000. Got it, everyone? Is this clear? Yes or no?
Yes, sir. It's clear.
Okay, please note this down quickly. First of all, note this down, including the example and the journal entry. Once you are done, let me know so that I'll show you the next slide so that you can also note down the posting of the journal.
Done, sir.
Done, everyone? Done? Is it done, all of you? Done, Abdatika, Vanisha.
So 1 minute.
Done, all of you done?
Yes, sir.
Okay. Now see, after this, after doing the posting of the journal into the ledger, we need to close the account as well. And in order to close the account, we need to ensure that debit and credit side both should have the same amount of balance. Like on the debit side, we have 40,000 balance. Total value of the debit side is 40,000. That means on the credit side, we should have the equal amount. Like in the Mehfil Mart, we have a credit balance of 40,000. So ultimately, on the debit side as well, we should have 40,000 as well. So for that purpose, like if uh, this is the only transaction that we recorded in the furniture account. At the end of the year, what do? We need to find out the closing balance of the furniture account. So we'll do by balance CD. By balance CD indicate that at the end of the year, what is the closing balance of the furniture account. So at the end of, since no other transaction have taken place, that means closing balance will also be same 40,000. Now when you will total the credit side, you will also get 40,000 on this side as well. Similarly, on in the Mehfil Mart account, you can see on the debit side we have furniture only and no other transaction is recorded here. And at the time of closing the account, we need to find out the closing balance of the account. So we'll write down to balance CD. Amount will be 40,000 and we'll also put the date 31st of March of the particular year. Here also you'll write down 31st of March. What I want to say is that in case of asset account, any asset account, we need to find out the closing balance and closing balance will be written on the credit side. But when you will prepare any account which is related to liability or like in this case, creditor, the closing balance of creditor account is always recorded on the debit side. So assets closing balance is to be determined on the credit side and creditors closing balance to be determined on the debit side. All right, everyone, is this point clear to all of you? Okay, so this is how we will show this. Just a minute. Oh, so we are presuming that we are maintaining the ledger on monthly basis. So 5th June, on 5th June, we passed one transaction, and at the end of the June, we will be finding out the closing balance of the furniture account. So on 30th June, we will enter the transaction. Similarly, 30th June to balance CD for Mehfil Mart account. Then we will total this 40,000, 40,000. Please note this down as well. Please enter these values. Done? Shall we move to the next question? Everybody?
Just wait.
Yes, sir.
All of you done?
Yes, sir.
Yes, sir.
Okay. All right. So let's move to the next question. This time question says on 18th of April, received a check of rupees 24,500 from Poonam and allowed her a discount of rupees 1,500. First of all, we need to pass the journal entry of this question, right? And let me show you how we will first of all journalize this transaction. Guys, I want you to note this down. First of all, please note down the example quickly, and then I'll show you the journal entry. Just ignore this point right now. Just note down the example, then I'll show you the journal entry of this. Done? Okay. Just pay attention, try to understand how do we pass the journal entry for this question. So the journal entry for this question will be bank account debit, right? Bank account will be debited by what amount? Bank account will be debited by 24,500. 24500. And we have allowed a discount as well. And whenever discount is allowed, discount is considered as a loss or an expense. So discount account will also be debited. Discount account, discount allowed account debit. I'm sure all of you will be able to pass the journal entry for this transaction since we already learned the journal in the previous chapter. Bank account debit, discount allowed account debit to
Yes, sir.
tell me
Account.
to Poonam account, right? What will be the amount? 26,000, right?
26,000.
And what will be the narration for this? We'll write down being amount received from Poonam in full settlement. Instead of paying 26,000, she paid only 24,500 and got a discount of 1,500. This is how it will be journalized. Now, once the journalizing is done, what we will do, we will now post this into the ledger. Posting. Could anyone please tell me how many accounts do I need to open? How many accounts I need to open? Three accounts, correct. So first of all, we'll open a bank account.
Allowed account and phone account.
Perfect. Bank account will be open. So particulars, sorry, date. Date. Particulars. Amount. Showing ledger folio is not compulsory. You can skip that column as well. Date. Particulars. And amount. And Poonam account as well. Poonam account. Again, one column for date. Particulars. Amount. And one more account. Discount allowed account. All right, so this is it. These three accounts need to be prepared. So now we will record all the journal here. First of all, in the bank account, what do we need to record? Bank account. In the bank account will be debited by 24,500, right? Bank account need to be debited by 24,500. So we'll go to the bank account, and on the debit side, bank account will write down 24,500, right, everyone? And we'll also write down the date of transaction. Date of transaction was the 18th of April. 18th April. Now tell me what name I should enter here. To which account need to be written over here? To bank account was debited and Poonam account is credited, right? So
Poonam
we'll
account.
write down the name of the Poonam account. To Poonam. Right? Okay. Now we'll move to the next account, which is discount allowed account. So we'll go to the discount allowed account, and discount allowed account is also need to be debited, right? By 1,500. So I'll write down 1,500 here. And now tell me the name. What should I write down here? To Poonam account, right? Okay. Now we will go back to the journal again, and in the credit side, on the credit aspect of the journal, it says to Poonam account. Poonam account need to be credited by 26,000. But it will be written like this. First of all, bank account, and going in the Poonam account, we'll write transaction as on the credit side. We'll enter 24,500. This is for bank, by bank account, and 1,500 as well by discount allowed account. All right, and we'll put the date 18th April. 18th April. This is it. All the transactions are entered at the relevant account. Got it, everyone? Is it clear to all of you? Yes or no? And since it is done, we need to find out the closing balance of each and every account. So for this account, we will find out since no other transaction have occurred. That means we will simply find out the closing balance, and closing balance of this account will be by balance CD 24,500. And when we will tally both the side, we will be getting same amount, 24,500 and 24,500. Coming to the Poonam account, on the credit side, we have 24,500 plus 1,500. No other transaction on the debit side. So whatever the balance on the credit side, whatever the total of the credit side is, that will become the closing balance of the Poonam account. We'll write it as to balance CD 26,000. And we will put the date as well. Date will be, I'm assuming that we will be preparing the monthly account. So 30th of April. And here as well, 30th of April. Shows this account now, 26,000 on both the sides. All right, and moving on to the discount allowed account. On the debit side, we have Poonam account 1,500. And since no other transaction is there in the discount allowed account, so entire amount will become the closing balance as well. So we'll write down by balance CD. CD basically stands for carried down. This indicate closing balance of the account 1,500 on 30th of April. All right, everyone, is this clear to all of you or not?
Yes, sir.
Please note it down quickly. Anybody have any kind of doubt, please ask me. Anybody want me to scroll to any specific section of the solution, let me know. Or else you can write down from here as well. This is the journal entry and this is the ledger for Poonam and bank account. Discount allowed account is on next slide. Please note this down, then I'll switch to the discount allowed account. And let me know once you are done.
Can you move to the next one?
Everybody done? Shall we move to the next slide?
Yes.
Other than Labiba, Vanisha, Ritika, Zainab.
Yes, sir.
All right. Here we go. Done, everyone.
So just 2 minutes.
Done? All of you? Ritika, Zainab.
Yes, sir.
Yes, sir.
Okay. All right. So this is what ledger is. This is how we prepare ledger. And since we don't have sufficient time to do other question, we only have 5 minutes left in this session. We need to do this question, but I think this requires at least 10-15 minutes to solve this question. Or anyways, let's do this question and then only end the session. Okay, let's do this question. All right, everyone. So see, in this question, what does it say? In this question, we are not required to pass the journal entry. Instead, it says that from the following particular, prepare the account. We just need to prepare an account of the Buddhi Raja, the proprietor of the business. Buddhi Raja is one of the is the owner of the business, and for this owner, we need to prepare the account. Keep that in mind. Whenever you need to prepare the proprietor's account, it means that we need to prepare the capital account. We need to prepare what? Which account? Whenever it says you need to prepare the proprietor account, it basically means that we need to prepare the capital account in the question. All right, I hope this point is clear. Whenever question is asking you to prepare the proprietor's account, that basically means that question is asking you to prepare the capital account. And in order to prepare the capital account, you have to remember the rule of preparing the capital account. You must remember the rules of debit and credit regarding the capital account. Do you know the rules? What are the rules regarding capital account? What is the rule regarding capital account? Anyone able to recall the rules of debit and credit? Rules of debit and credit, it says that whenever capital account increases, whenever capital increases, what do we do? Whenever capital increases, what do we do? Credit it, correct. And whenever it decreases, we need to debit it,
Debit.
correct. All right. Now you also need to understand what causes increase or decrease in the capital. We also covered this topic earlier in the, I think in chapter number 2, where I've told you that whenever there is a profit earned by the business, it increases the capital. Whenever there is a loss, it reduces the capital. Whenever further capital is being introduced, further capital always increases the capital. Drawings made by the proprietor from the business reduces the capital. So considering the effect of profit loss for the introduction of capital drawings, then keeping these things in mind, only then you will be able to prepare the capital account. All right. So let's now read the question. Since we understood this question requires us to prepare the capital account, now we can read the question and try to figure out the effect of each transaction. First of all, it says capital introduced. So that means capital is increasing. Drawing made by the proprietor. That means it's going to reduce the capital. Further capital being introduced. That means it will cause increase in the overall capital. Profit for the period. That means it will also increase the capital. Right. So taking these transactions into consideration, we need to prepare the capital account. I hope the question is clear to all of you. Right, everyone? Everybody? Is question clear?
Yes, sir.
Yes, sir.
Okay, let's now quickly move to the solution and try to prepare the capital account for this question. Buddhi Raja capital account. All right, so this is how we will prepare the Buddhi Raja's account. First of all, going back to the question, it says on the first transaction is capital being introduced 30,000. So since the date is not given, so I will simply write down the sequence of the transaction. Transaction 1, capital being introduced. So we'll write down by, tell me, what will be the entry for this? Tell me, anyone?
Cash account.
Correct, by cash account, 30,000. Since capital must be introduced in the cash, na? So we will increase the capital account, writing it as by cash. Okay. Okay. Next thing, it says drawing made by him. Drawings. Drawing is definitely going to decrease the capital. So second transaction by points. 500. Right, everyone? Is it clear to all of you?
Yes, sir.
Okay. And moving back to the question, Next transaction, further capital being introduced. Further capital being introduced. So this will be introduced in cash again. So we'll write down by transaction by cash. Further capital. This is not compulsory to write. I'm just writing it for a reference. By cash 65. 22,000. All right. Then the next transaction is profit for the period. Tell me, profit will increase the overall capital or decreases the capital? Tell me, it will increase the capital or decrease the capital? Tell me, profit will increase the capital or decrease the capital? Definitely increase the capital.
Increase
We'll
the
write down by
capital.
profit and loss account. Profit on. Profit of rupees. How much was the profit? 7,500. This is it. Got it, everyone? This is how we will record the transaction. Okay, now, as
Yes.
usual, we will total the, first of all, we will total the credit side. Since credit side seems to be greater than the debit side, so we will first of all total the credit side values. And by totaling the credit side, we will get 53,000. Then we will subtract the debit side value out of it. Subtracting 6,500 out of 5,300, the remaining balance will be, just a minute. This will not be 3,000. Instead, it should be 59,500. I'm sorry. Now we will subtract 6,500 out of it, and we will get the closing balance by balance CD. This will be 53,000. All right, everyone. And now we will close this account. 59,500 on both sides. I hope this is clear to all of you. Is it clear, everyone?
Yes, sir.
Okay, that's great. All right, so this is how we prepare this account. Okay, so if it is done, just tell me whenever you are done writing this, and let me check if I have some other question to give you as a homework. All right, so I don't have any question as of now to give you as a homework. Just I just do one thing, just revise the things that we did in today's session. I'm not giving you any homework as of now, since I don't have question that you will be able to do. I have some other question like this kind of question. This will be a little difficult for you to do right now. We will discuss these questions in the next class, and then I'll give you some other question in the next session. The only homework for you is that you go through the topic that we covered today. You just revise everything before attending the next class. All right, I hope everything that we discussed in this session is clear to all of you. Is it, everyone?
Yes, sir.
Okay. All right, so this is it for today's session. Now you can sign out. Thank you so much. Take care. We'll see you in the next session.
Thank you, sir.
Okay.